What is going on, family? It is your boy, Low Daddy, Low Rider, Low Stradamus, the Dollar Store TC, whichever way you want to chop it up. And whether you like me or not, Aphria just dropped their earnings report today, so you cannot get rid of me. We're going to dive right into that. We got a lot to get into, but really quick, as always, please, please, please smash that like button, smash that subscribe button. Leave a comment if you're feeling generous, if you have any requests, comments, or concerns. And most importantly, ring the little bell next to subscribe button so that you get notified every time we go live, every time we drop a new video, and we're making money up in here, which is every single day the stock market's open, folks, except some days. Anyway, let's dive right into it. So, as always, you can find this information on the website, growsaloon.com/growth-resources. You're going to go to the public companies tab, and I'll drop another thing you can click on right above my head or somewhere above me if you don't know how to access this information already. We're going to go into here, the keyword, we're going to separate it by, you can do either APHA or you can just type in Aphria, it'll separate it either way. We'll hit enter, and here we go. We're going to have Tilray pop up just because Aphria and them are merging, and I've got that in the notes, so it's recognizing that. But we only care about Aphria today. So you can see at the time of me putting this information in, stock price was $14.06, closed at $16.28 on Friday, and that gives us this market cap, and then we'll get to these numbers later on. So as you can see, with the stock price dropping by over $2 today so far, I think at the time of this video it's already into the $13 range. It's only been about 30 minutes too. Probably not a great earnings report. They weren't expecting to have any earnings per share just yet, but I think that their earnings per share was way lower than anyone anticipated or anywhere that I saw. So let's dive into it. What caused this? Well, we can see that our total assets this year, this is something that's positive, it went up by about $245 million, which is a good thing. How they managed to raise their assets that much. They had additional offerings. They offered about 50 million, actually more than 50 million new shares this past year, which dilutes the value of our shares as we've discussed before. Our total liabilities also, even though it's only went up by 245 million, our total liabilities increased by 463 million. And you can see, probably can guess we don't like that. Liabilities going up is not a big deal. It helps our company scale. But when our liabilities are going up quicker than our assets are going up, well, you can see in a minute what happens to our stockholder equity. So our stockholder equity was worth, that's how much our shares are worth on paper, $1.45 million at the end of the 2020 fiscal year. And at the 9-month mark at the end of Q3 of 2021 for them, because they're on a fiscal calendar, so their fiscal year ends on May 31st. At the end of the Q3 of 2021 for them, our shares, our stockholder equity, are worth $1.2 billion. So that has gone down by 243, almost $244 million. Not what we want to see if we're shareholders. Our shares, not only are they increasing the share pool, but our shareholder equity or our stockholder equity, synonymous, are going in the wrong direction. We want to make sure that that's going up quarter after quarter, year after year. That's what makes us feel confident in the companies we're invested in. So not to say that this company is a bad company just for that, but let's go a little bit further into it. See, they don't pay a dividend, so nothing to worry about there. And then in Q3 2021 for them, our revenue went from, this is 2020 right here, Q3, 115.5 million to 122.9 million. So we went up by $7 million. Good, that checks a box for us. We're going up. Now, in the first 9 months of 2021 for them versus first 9 months of 2020, you can see we went from $312.9 million in revenue to around $9 million in revenue. So up by 54, almost $55 million. Another box check. We're headed in the right direction as far as revenue goes. Net income, you can look at those numbers. Really, all these numbers are going to help us do, well, one, you can see we lost a lot of money on that revenue this year. They're going to help us find our profit margin. So in Q3 2020 versus Q3 2021 up here, you can see last year they did 3.5% for profit margin versus this year they did negative 238, almost 239%. So heading way in the wrong direction. They bought a bunch of shit. That's probably why. But yeah, not going up. We want to make sure our profit margin, even if it is this narrow, 3.5% is not much, but it's profitable. We want to make sure that that's going up, heading, making us more money, getting us better earnings. So when these reports come out, we don't go from $16.28 on Friday to Monday morning. All of a sudden, we find ourselves in the $13 range because we had terrible earnings reports. That's what happens. Now, for the year to date, this is the first 9 months of 2020 right here, first 9 months of 2021 right here. We went from almost 3% in 2020 to negative 106, almost 100 and negative 107% in 2021. Not great. Heading in the wrong direction there as well. So you can see the breakdown. You can click on this. You'll go to the annual report that we pulled from. You're gonna have to break this down yourself. I did, my best to save you all the time. The reason that this takes so much time too is because it's in Canadian dollars. So I had to convert every single one of the dollars you see on my sheet. Kind of a pain in the ass, but that's the only way we can find accurate metrics that are going to line with the stock price that we see, because the stock price we see is not in Canadian dollars, it's in US dollars, right? So that helps us get our ratios, which you'll see at the very end over here after I basically summarize everything we've gone through so far in the video. Starting with our debt to asset ratio, this is a 0.44, so that typically indicates a safer investment. They're financing the operations mainly on shareholder equity, not on debt, which is a good thing. But the reason that they have so many assets right now isn't because they're running their operations well, it's because they're raising more money. They're having additional share offerings, so they're diluting the value of our shares. Not great. But yeah, 0.44 makes you feel safe there. Keep an eye on that in their Q4, or if they have their just annual filing, they should have it coming up at the end of May in 2021 to summarize their whole fiscal year in review, which will be great. We'll definitely have that one too, and by the time that happens, they should already have their merger completed with Tilray, so it actually might come out with Tilray's report. But we'll see how that one plays out. Their current ratio measuring their liquidity is 3.37, which is a healthy level of liquidity, so we can check a box there. That's a good thing. Book value per share is $3.81 with the numbers all accounted for in here, and at the price of $14.06, which is what it was when I did my report. The price to book ratio was 3.69. So that's, a little bit above our threshold of 3.0, definitely not in the under 1.0, 100% undervalued category. But typically I'm looking for companies under 3.0 that that'll pique my interest, but 3.69 isn't too much higher. At this price, you could get a fair price on it if you're willing to take some risk, because you can see their operations right now are highly unprofitable. They lose a lot of money. They're having to have additional offerings. They're diluting the value of our share price. Not a lot of things going for them right now, but as the whole market starts to panic and rush out of this could be a good opportunity here for you to hop in. I've been saying for 4 or 5 months now that I'm not in the cannabis market myself because I haven't been able to find a clear winner, but I do think that Aphria and Tilray with their merger, they do stand a chance of winning this market. At least currently, what's going to help them increase their revenue even more would be if marijuana was legalized federally in the United States and they can start shipping in their product to the United States. But what's going to happen in that case too, as I've found out from my recent trips to California, is that there's a whole bunch of public companies who are looking to do the same damn thing as soon as marijuana gets legalized federally down here. It's just a matter of who's going to be more prepared and who's going to be ready to dominate when that does happen. So if you think it's Aphria and Tilray together, this could be a good opportunity to get in at a fair price. If you think it's Canopy Growth, I don't even know. I haven't done a report on them. I have no idea when their reports are dropping. But yeah, this dropped today. I myself, I'm not invested. I don't see a reason to invest right now either. I'm going to wait for this to play out a little bit more and start to watch some of the weaker players drop out of the ballgame, and then also see how things are developing in the United States over the next quarter or two before I pull trigger, if I'm going to pull trigger in any investments, because there is money to be made in this industry, but profit margins are very, very low. A lot of overhead costs, a lot of startup costs, a lot of scale costs. There's just, I think, better opportunities in the market right now, if I had to say. So, I myself, I'm not investing in Aphria right now at this price, but if you like the cannabis industry and you want to get in, this could be a good opportunity for you. So, hope this helps. If y'all have any earnings reports that you'd like analyzed, please, please, please drop them in the comment section below, and I will try to do them in the order they are received. If you like this video, make sure to smash that thumbs up button, and as always, smash that subscribe button. ring the little bell next to it so that you get notified every single time we drop new videos, every time we go live, and we're making money up in here, which is every single time and every single day. The stock market's open, folks, except for some days. Um, yeah, that's all I've got for y'all today. I hope that this helps y'all. I hope that they have better earnings reports in the future and that I have better news for you. And that if you are invested, and I don't think it's a good investment for whatever reason, I hope I'm wrong. I hope you make money. That's my end goal here, is to see everyone who watches my videos make money. And I'm okay looking like an idiot and a jackass if you do make money. So until next time, folks, until the next earnings report, I will depart for y'all for the day. And y'all have a great rest of your day, a great rest of your night, whatever time you're watching it. Just have a great time in general, folks, and I will see y'all next time.